Okay, folks, this is Brandon from Galaxy Market. Today is December 20th, 2025. It's about 7:35 a.m. Eastern Standard Time on Saturday as I bring you this video. And the title is the Santa rally on? Is the stock market going to be naughty or nice, or is the Santa rally canceled? Has these two people, Trump and Powell, been naughty or nice? Before we get started, for those of you watching this video, I want to wish you Merry Christmas and anything else that you might celebrate. It is the season of peace. And remember, Christ is the reason for the season, folks. And if you don't believe that, then still enjoy your holidays. And I wish you every goodness that the Lord Jesus Christ and God can bring you. However, not to offend everybody, I also wish you happy holidays. Now, with that, we're going to have a holiday shortened week. And as we show here, we're going to be seeing a early close, down on December 24th at 1 p.m. And of course, that's Wednesday. And then Thursday, the stock market is closed. And then, of course, Friday, the stock market opens back up on December 26th. I believe that majority of the traders have gone home to celebrate their respective holidays at that point. And so it's going to be a very choppy market. It's going to get wild. All right, and why do I think it's going to be wild? Let's find out. Okay, so here's the disclaimer. For those of you watching this on X.com or on YouTube, please pause and read it. If you agree, please move forward. And of course, I want to thank you all for following me on x.com/galaxy.market. I publish a lot of my commentaries and things as they appear that my members get a little bit later, but you still get my thoughts that you won't get on the YouTube video. And so thank you so much for following us. And also remember to like and subscribe on YouTube. All right, so let's get started. And this is probably the biggest happening last week, and everybody anticipated it. And a lot of people thought that this not carry trade, but Japan raising their 30-year bond higher was already priced into the market. I'm not sure if that's actually the case. I think we're going to have a delayed response, partly because this Japan raising their 25 basis point was the basis for the carry trade, in which you borrow money at a cheaper rate overnight and then manipulate the markets here in the US and in Europe and then pay it back at sometimes at a negative interest rate. That those days are over, and like I said, the market mechanism for manipulation is ending, because this is what that Japanese carry trade was all about, and this is at a historical level. Okay, highest level in history is 3.435%, and that's going to be rearing its ugly head shortly. Okay. The other thing that you might have noticed is that silver is acting like it's on steroids. It's trading like it's Tesla. And a lot of you are saying, oh, it's overbought for months, that we're going to be crashing below 50, 45, 35. I don't know. It depends on who you talk to. And yet silver has continuously gone higher, and I believe we are going even higher because of this situation right here. We are basically at a point in which gold and silver are now decoupling from each other. In the past, they were moving together just a few months ago. And now we have gold kind of lagging. I mean, it's still doing great. I mean, it had 4,400 this week, and silver had 3067, not 37, but 67 plus. And my target of 68 was barely missed, but it's good enough for government work. It's moving higher next week. I believe so. And we have to pay attention, because gold and silver moving higher is generally a early warning or late warning sign, in our case, that something is not right in the world. And we all know that, because when you print money out of thin air, continue to manipulate not only commodities market, lie about statistical information about CPI, PPI, jobs data, those are all made up, folks. It's made from Fantasyland in Disneyland. And as long as people believe that, the market functions. The problem is people are going, wait a minute, there's something off here. And that offness, something off, is being told by the silver rise. Now, silver has been the most manipulated asset in the history of the world, and it continues to be so. I believe that there were over 2 billion paper shorts implemented on silver short, and yet they were not able to bring silver and contain it from hitting all-time highs on Friday. Okay, and it probably would have gone higher had Friday not been the triple witching options expiration when equity index and all the commodity futures options basically expires, and that caused a little bit of volatility, and generally it tends to be a little positive, and that's what we got in the markets, and we'll talk about that in a bit. What silver is telling you, when silver is diverging from gold like this, and now silver is leading and gold used to lead, and I've always said that Bitcoin leads first, and they did, and then gold followed, and then now silver is breaking out. So basically, these are the three-step program in which we're going to be seeing unwind of these blatant market manipulations, the sins of printing money out of thin air with nothing backing anything, causing inflation, and Federal Reserve Bank pretending that they don't understand why there is inflation. You know, it doesn't take thousands of PhDs at the Federal Reserve Bank to figure out that they don't know. We know what's going on, okay? And they know. They just tell you they don't know. Here's the problem. Banks are in trouble. Okay, and because they are net short significant amounts, and we're going to talk about, Bear Stearns, Lehman Brothers, what happened to them, and now we're looking at B of A, Citibank, HSBC, you name it, they're all part of it, Deutsche Bank, whatever, right? There's trouble in the market that's coming. This is what this is telling you. And then I thought this was interesting. When you Google in AI on Grok on X.com, and I think Grok is great for the most part, still has a little bit of biases. I'm not going to talk about that here. Okay. So as of Q2 2025, and this is something that came out about 35 minutes ago, is that B of A holds about 44.7 billion in precious metal notional shorts, and so Citibank is holding 150.7 billion dollars worth of shorts. Okay. So no specific breakdown is provided, but OTC shorts are not publicly priced. And then when you ask, what's the average price of these shorts? They know. It's right here, $25 to $30. Okay, these guys are in serious trouble. And, this is where they're looking for ways to cover these shorts. And this is why silver is breaking out the way it is. And it's just getting started, folks. All right. B of A and silver shorts are at the average of $25 to $30 an ounce. And then Citi obviously holds over 1 billion in paper shorts. Think about what's going to happen. I always knew it was one of these banks. I never thought it was going to be the Citibank that's going to be causing all kinds of trouble going forward. You watch Citibank, folks. And then we already talked about this. It's right up here. But Citibank is holding $150.7 billion of notional silver shorts, paper shorts, at the average price of $25 to $30. Okay, they are down negative $150.7 billion. What is the market cap of Citibank? I believe it's around $45 billion. Okay, they're screwed. Okay, this is why there's going to be more manipulations. There's going to be a lot of volatility, and this is why silver is just getting started in terms of their move. And one more thing that I wanted to say, I kind of talked about, Bear Stearns and of course Lehman Brothers. They want you to think that it was the $2.5 billion margin call on mortgage-backed securities that they were holding, right? It was not. It was the silver shorts that collapsed them. Okay. And you may want to read more about that the more you dig into it. And I traded through those period. But I just felt like, why them but not anybody else? If everybody was offered bailout money, why was it just Bear Stearns and Lehman Brothers? Because they were leveraged 2.5 billion margin calls on silver on the day that it collapsed. This is truth, and this is facts, folks. And I think history is about to repeat itself. Okay, so here's the bottom line. Do you still believe that Bear Stearns and Lehman Brothers were taken down by subprime mortgage? It was not. Okay, it was taken down by aggressive silver shorts. And today it's not just a couple of banks, it's all the banks. But I think the one that's going to be in trouble, I always thought it was going to be Wells Fargo, B of A, Deutsche Bank, right? It's Citibank. Okay. And that's what we want to find out. What's going to happen? Get your popcorns ready, folks. So we talked about this last week. I said silver was in an uptrend a few weeks ago. We were at $59 at that time. Everybody was saying that it's overbought, that it's going to crash, and the silver slam crew is going to continue to slam it down. And they tried. And that's the thing is that, like a drug addict, if you take too many hits, it's going to stop your heart. Okay. So I said, hey, establish the $60 firm base afterwards because when we just 2 weeks ago we were at 62.025 again. Chorus of people saying I'm crazy for calling the $68 to $82 target by the end of the month, and I even said by maybe Friday we're going to hit that $68 level. But anyways, we established a $60 firm base 2 weeks ago, and this is how we ended. Okay, we were at we are at 67.490. Okay, so we missed it by a little bit, but you know what? Give me some credit here. Okay, 68. That's just starting, folks. All right, the short squeeze is going to be on an epic proportions. And the rumors that JP Morgan Chase and a lot of the American banks are uh, levered long now, maybe that has some validity to it. But all these European leaning or Asian leaning banks like Citibank, HSBC, Deutsche Bank, UBS, I mean, you got to watch those people. Okay, so saga continues. I think we're going higher. I still believe we're going to hit at least 68 to 82, maybe even higher. Okay, is there a chance at 100? Sure, why not? Let's just throw it out there. I mean, it's just basically the most suppressed asset in the world is silver, and that's what's going to happen. So, what don't you get about silver, right? Um, I'm of the opinion that you don't own it until you hold it, and they're still available. The premiums are outrageous. I mean, I think if you go to any of the online dealers or even your coin shops, you're going to find that you're going to be paying somewhere between, depending on what you get. I love Silver Eagles, but yeah, Silver Eagles are what? There's like $9 to $10 premium on it, so you're going to be paying about $77 to $78. But still, when you look at it in the grand scheme of things, for silver to gold ratios to come back down to the historic 1 to 10, 1 to 12, whatever, silver's going to be at like $400 to $600, right? Right? You don't buy gold and silver physicals to trade. You buy it to hold and hedge against inflation. If you want to trade, then you trade like we do, silver and gold futures options. That's what you do. Not financial advice. But so here's the thing. FOMC cut 25 basis point again. And this is where I'm telling you, there is absolutely no real valid reason for Federal Reserve Bank to exist. They don't control inflation. They don't have a mandate or the mechanisms to keep maximum employment. Okay, look at this man. He is a small man. Okay, doing the bidding of the overlords of the banking cartel. Okay. And I'm not going to get into that, but in the Bible they call these people money changers, and look how happy he looks. Okay, and honestly, I'm not sure what's going on with President Trump either, but the fact of the matter is, these two are the power players, elucidating the illusion that that the U.S. government or the Federal Reserve Bank is the steward of good economy. The good steward of good economy is God, folks. All right, and sound money principles. So they cut 25 basis point, and this is an old one. I said, it was at 41.39. Of course, they cut rates again, and do the math. Hyperinflation bonds are screwed, right? Because Fed does not control inflation anymore. Too much money was printed. And so this Friday, December 19th, We finished at 41.51. It's going higher, folks. They cut 25 basis point, and if you look everywhere, people are up in arms. How can this be? The Fed cut 25 basis point, but the mortgage rates are rising. It's because hyperinflation is here to stay. It's because Trump is setting U.S. up for a bankruptcy. They are basically gathering assets together to default on their bonds, one way or the other. That's what's going to happen. You don't think he's not posturing about saying stuff about Venezuela and how they stole this and that. It's basically protectionism that is coming, which is dangerous in history. But at the same time, all bankers take you to war. That's why the war scenario is beating higher, higher. The drums are beating higher and higher. I can't talk this morning, but rates have gone higher, not lower. Hey, you still believe in the fallacy of the Fed and the Fed, folks. All right. So I want to go over where I think we are on this analog, because I do believe we are following this 2008 to 2009 financial analog. I started saying that December and end of November started here. I believe this is where we are right here on Friday's close. Okay. And am I expecting something very exact? No, I'm expecting that we are on a downtrend. Okay. And then something like this is coming soon to a theater near you as early as January. Okay. So all of these things. And if you need something like this, click on the link in the description below or email me at coachbrandon@protonmail.com. I'd be happy to send you this PDF or join my group. Okay. Anyways, and these are all the events that took place. And notice that FOMC starts lowering that 25 basis points. They've been injecting billions and billions of dollars in repo. And surprise, surprise, that's what's happening right now. Okay. So all of these things are things that happen. Here's Lehman Brothers bankruptcy, okay, and the Bear Stearns is coming right up after that. Okay, I just told you what brought those two banks down is basically the silver shorts. Okay, pay attention to Citibank, folks. Okay, so. And then here is the cryptos. I said last week cryptos are about to have one more capitulation sell-off and generational buying bottom. We're at $1.98. We hit as low as $1.76 and change on XRP and other cryptos, but I like to focus on XRP here. And have we bottomed? I think there's still one more push lower, but you basically have to nibble on the way down, right? Yes, I do believe that XRP will provide the liquidity necessary for the transition away from the fractional reserve banking system and fiat money system, and to act as a quote-unquote savior in this liquidity crisis that's coming. And if you don't believe that, and the reason why prices are falling is because people like BlackRock, companies like BlackRock, Blackstone, I don't know, all the big banks, they're loading up for their ETFs right now, and they want to scare you out of this so that they can sell it to you when it's here, or have them buy their own ETFs while you make 8 to 10% a year, possibly on a good year off of that, versus making generational wealth. You do the math, okay, and that's all I'm going to say about that, okay? And so one thing that I do want to say on XRP, the reason why I think we're going lower is that this slope has steepened. Here's the downtrend. Here's that phase 2. I believe we're going to hit right about here, and then we're going to start down that phase 3. And if you look, and every time we think we have bottomed, and rallied and we sold off. We rallied and we sold off. We're beginning to do the same thing. Notice how it's getting lower and lower. I think we have one more leg down. I think down into that $1.75 into this like $1.35, $1.40 range would be a generational buying opportunity. But sadly, most people will not buy it because they think it's going to 50 cents. All right, let's do some stock market analysis really quickly, and then I'm going to end it because next week is going to be after Monday and Tuesday action. Things are going to get wild, right? So I said, hey, look, you know what? Markets generally start to signal some volatility down here on the downside. And then we got that rescue, and then we came right back down because people become bullish overnight, and this is what's happening. And now we found support right at the 50-day moving average. We're going to move higher, folks. Okay, VIX and the volatility is going to rise. People are not bearish enough. Okay, let's talk about silver real quick. Silver, what else is there to say? Okay, oh, it's so overbought. Oh my God, it's gonna die, right? Well, actually, folks, you know what's happening is here's phase 1, 2, and 3, right? We're about to go parabolic. This is what we're waiting for. Can it take out $100? Yes, it can. Okay, but I'm gonna remain conservative and say 68 to 82 by the end of this month. Okay, and for those of you that keep saying that silver is coming down because it's overbought, by the way, this RSI is not an overbought, oversold indicator. It's just a momentum indicator. All right. All of the momentum is suggesting that it's going higher. It's moving higher. Oh, but the CCI is on a downtrend. We're moving higher, folks. All right. And then, of course, people are saying, oh, look at the stochastics. There's some divergence, but it's just going to move up and down in this area. It's going higher. All right. And then, of course, gold is more measured, right? Silver is leading gold now. Okay. Gold is breaking out, folks. All right. It's finding support. It's behaving a little bit better. We have a little uptrend down here. Don't worry about this, right? That's not a divergence that you want to look at right now. Right now, we need to just clear this area, get above 4,400, and we're off to the races to 47 to 4,900 on gold. All right. All right, SPY. Okay, here's the daily. Okay, oh my gosh, we bought and we found support at 50-day moving average, and we're going to move higher. We may, or this is just a byproduct of the triple witching options expiration. We still have the divergence in the RSI. Okay, and then of course on the MACD, we're about to looks like going to form a bullish cross, but I think it's just going to chop around here and move lower because the whole aspect of this is that we are declining. We are declining on the CCI. We are declining on the stochastics. Okay. There's a little bit of a upside move, and I think that was basically foretold by the Friday triple witching options expiration rally. Okay. This is probably the most important factor because I love my PPO ADX indicator. Basically, it's got a negative crush, right? And we got this action going, and it's probably coming right back down, but it's maintaining this type of a structure. So I think the bearishness continues. We're at the market top, folks. Okay. And then accumulation distribution is coming down. So that's on the daily. On the weekly, it tells a little bit of a different story. It tells a story of stalling right up at these levels. It does look a little bullish because it found support at the 80 MA, but we're going to stall out here and we're going to start selling off earnestly. The question is, are we getting that Santa rally? Has it started, or is it just a fake out function of the triple witching? And we're going to find out shortly on Monday. My guess is that we're going to get naughty coal in your stockings this year because RSI is divergent on the weekly. Everything is divergent on the MACD. We're getting a little bit of that histogram expansion down into that area. All of the lesser moving averages are just kind of flattening out. It's really not showing anything great. And there's so much meat on this bone once the sell-off starts. And I believe we're still there, okay? You look at the CCI, it's negatively divergent. Stochastic, unlike the daily, is now pointing back down. And of course, the PPO ADX, okay, this is why I trade on the weekly, is bearish. Anything you see this, okay, or this, is bearish on the PPO ADX. If you want to learn more about that, I have courses regarding this. All right, so forget about that one. QQQ, where are we? Okay, QQQ got stick saved off of the 20 SMA and now stalling out into this triangle. Just got right back into there. Everything is divergent, folks. All right, this is the weekly, and that's what's happening. Federal Express, folks. All right. Federal Express reported earnings and it's running right smack dab into this area. This is a great area to short. Even if it pops a little bit, we're going to come back down. Okay. Shipping is dead. And it is the first leading indicator of that activity. And Federal Express beat earnings based on the fact that they're cutting jobs. I think they cut, what, 25,000 jobs globally, okay, to make their numbers. But they are screwed in some regards. Watch United Healthcare, folks. All right. United Healthcare is basically showing some bearish signals. Here's some, after finding some bottom. Okay. We got the bearish engulfing candles. We got the uh, divergence in the RSI. Stochastic, the MACD is about to form a death cross down here. Just pay attention to this. We got divergences galore on the CCI, on the stochastic. We're having a bearish cross. And then when you look at basically the PPO ADX, yes, we had the crush indicator. This is where we went long a few months ago. And but now we're about to form this bearish formation that's about to come. So this is an early warning sign. Now, if you guys are bullish on United, we will get bullish. I mean, I think this is one of the great AI plays for healthcare. But this is accumulation distribution. It's on the way down. This is, not a healthy thing. This rally was just basically being sold into. Okay, so that's what we have on that. Carvana. Okay, I believe we are stalling out and we basically topped. Here's a gap that it needs to fill. It's so far away from the 20 SMA on this weekly chart. Okay, I think the RSI is beginning to form that negative divergence. This is a maximal bullishness. Okay. Why is the stock going up when subprime auto market, tricolor, there's so much scandals going on about subprime, and these are subprime lenders, okay? Right? Because it is manipulated. And you know what? The bigger they are, the harder they fall. This is basically a warning sign. CCI at these levels above 250 are basically contrarian. And we're waiting for some stochastic fallover. Once this rolls over, folks, it's going to be huge, okay? So PPO ADX beginning to form, okay, after forming this bullish cup, and we're now beginning to show the ends of it. We'll probably get one of these formations. Here's the big canary in the coal mine on the Carvana. As it's making that bullish thing, it's basically selling off. They are selling, insiders are selling, institutions are selling to you, the public, which are always the bag holders. All right. Let me go over Citibank real quick because Citibank is something that we are paying attention to, correct? So, okay, let's see. Where is my Citibank? Okay, let me look for Citibank. There you are. Okay. Remember, banks are manipulated. Okay. We're kind of flattening out on the RSI. All right. This is kind of the maximal peak. Okay. Once the silver things come out, this is exactly what Bear Stearns was doing before they started getting into trouble. And then, of course, Kramer came out and said, buy Bear Stearns, and they collapsed a week later. Waiting for Kramer. Gaps galore. Okay. And so why it looks so bullish, and I'm saying I'm very bearish on C and all the banks for that matter, because they're holding on to fraud. They're holding 10-year U.S. Treasury bonds, which is going nuts. Okay, everything is at the maximum peak. Okay, right here on the commodity channel index. This is contrarian, folks. All right, very, very contrarian. Okay, PPO ADX. Okay, what's bullish right here? Now we're beginning to have to be at the maximum range. We're at the maximal peak on accumulation. Okay, because the central banks cannot have banks fail, and this is why Federal Reserve Bank said on the last presser, Jerome Powell said they're going to start pumping in $40 billion a month into banks. That's what they're saying. There's liquidity issues. Okay, so That's what I have for now. And, we did our looking at the charts. Here's the bottom line. Silver is leading gold. That is never, never really a great sign. Either gold or silver rising is telling you that there's something wrong. Fed's 25 basis point cut causes 10-year yields to rise and mortgage rates to rise. People are just pulling their hairs out right now. Silver did hit 67.68. That's close enough for me this Friday, but there's more coming. 68 to 82 plus next week, possibly by the end of the month. Japan JP30 at 3.418. That is historical highs, and this is marking the end of the carriage trade. So what are we watching for? Gold and silver parabolic move began on 1219. Again, we starting that phase 3 move higher. Gold 5,000 and silver 68 to 82 plus. Could we see 100? Yeah, if things get really bad coming before end of this month. Fed is impotent. They had served no function other than creating income disparity and creating hyperinflation so that elites become more elite and you become more peasants. 25 basis cut causes 10-year yields to rise. That's the warning sign. Japan then raises rates. It's the end of the carry trade. Let's see what happens. Give it a few weeks. Cryptos are about to give a capitulation bottom soon. I don't think the bottom is in yet. One more leg down. I'm hoping so we could load up. Crash is coming. Is it santarally? Santa spelled the other way is Satan, right? Are we going to get santarally or Satan rally? Okay, that's the enemy, right? Watch Citibank, Bear, and Lehman Brothers was taken down by silver short positions in 2008, not the subprime loans. All right, I believe that. All right, so thanks for following. Follow me at Galaxy Doc Market and like and share, and above all, comment, good and bad. I can take it, and subscribe on YouTube if you do. And then, of course, if you want to work with me any way, shape, or form, email me at coachbrandon@protonmail.com or click in the profile or description below to join our Essentials membership group. We have different tiers, different mentorship programs, but Essentials will get you the watch list, my daily market commentaries live, and some great community. Okay. And otherwise, get some alpha. Merry Christmas, Happy Hanukkah, whatever you celebrate. Let there be peace on earth and lots of blessings to you. Okay. Let's pray for good things to come. The world is not so doing great right now, but at least we're gonna have fun in our group. Thank you so much. Bye bye.